What's up, trader? Welcome to Prime FX. Hope you have been trading green. In this video I want to share a very good strategy that I think you will need in order to take your trading to the next level. Okay, so this strategy is very simple, like other strategies that I've been sharing on this YouTube channel. My strategies are very simple, like simple pure price action strategies. So in this one I will make it quick. Like I said, I don't want my videos to be too long anymore, so I will make this video a quick one. Okay, so let's just jump into the strategy. Okay, so I've marked out on the blank chart what we need on the strategy. But before I start explaining, I want you to do a few things for me. Like this video, number one. Subscribe, number two. Then share this video with your friends. Okay, that's the third one. Please do this for me to show your support, okay, so that we can grow this channel together. Okay, I'm begging you, like, share and subscribe. Okay, so let's dive in. So in this strategy, what do we want to see the market doing? What do we want? Okay, remember, we always have to follow the market trend so that we can follow the river, flow with the river. If you go against the river, you will definitely find it difficult to swim. Okay, so when you're swimming, you need to go with the flow of the river, so you need to go with the flow of the trend here. Okay, so what do you want to see in this video, in this strategy? I mean, you want to see a trending market. Okay, you want to see a trending market, a market that is making higher highs and higher lows, higher highs and higher lows. Okay, so that's what we want to see for an uptrend. Okay, this is an uptrend scenario. So in this case, we want to see a consolidation. Okay, this is a consolidation breakout strategy. Okay, most of the times the market consolidates a lot. Okay, when you see a trending market, to get to a point where it will start consolidating, start ranging, going up and down in the same level of support and the same level of resistance. So that's not good for we the traders, because we want the market to be making a clear direction so that we can join and make some money. Okay, so in this case, we want to see a consolidation. Now we want to know how to trade this consolidation. Some people buy at support and sell at resistance. Here, some people do this. Okay, they buy at support, they sell at resistance, but this is not really advisable, because you don't know if this support is going to hold again. You don't know if this resistance is going to hold again. You might sell at resistance, and boom, markets will break out of the resistance and continue heading, going higher. And you can you can buy at support and watch the market dip and continue going down. So we don't want that. We want a clear direction. We want the market to break up and show us where it wants to go. So in this case, we want to see the market break out. For example, we want to see the market break out up or down. Okay, we want to see the market break out. So when we get a breakout, what do we want? Now, first of all, these are the rules for this strategy. Number one, you want to see the market at least make a low, a high, a lower, a higher low, and a higher high, at least, to show you that the market is in a trend. Okay, you want to see a trend, at least 1, 2, 3 move. Okay, so after seeing that move, then you want to see a consolidation. Okay, you want to see a consolidation, and you want that consolidation to have at least 2 levels of support and 2 levels of resistance. Okay, so in this case, we have 1, 2, 3 levels of resistance and 1, 2, 3 levels of support. Remember, you want to see the price. You want to see price have at least 2 levels of support and at least 2 levels of resistance. Okay, in this case, we have 1, 2, 3. So after you confirm that the market has at least 2 levels of support or 2 levels of resistance, in this case 2 levels of resistance, then you want to see a breakout either to the upside or to the downside. Okay, so you want to see a breakout either to the upside or to the downside. In this case, we got to break out to the upside. Now, do you want to trade immediately the market breaks out? No, you don't want to trade that. You want to see a pullback, a retracement. So after you see retracement, then you wait for a rejection, showing that price is rejecting that level of resistance. Okay, in this case, let's say we have something like this. You want something like this. Make sure that price is rejecting that level of resistance, and after that you are going high. Okay, so you are going long. So let's say this resistance, you don't mark it out with a single line. That's a mistake some people do. Okay, you don't mark resistance with a single line. with a single horizontal line. You have to mark it out with at least two horizontal lines, or you put a box in there, you put a rectangle 2 in there. Okay, so we have this. Let me bring out this again. So we have this as our level of resistance. Okay, so you see, after the breakout, price pull back to the resistance, and if we get a rejection here, then we are going long. So this is an example of an uptrend. Okay, or you want to see, in case you see a breakout to the downside, in case something like this happens, you still want to see the same thing. Okay, you want to see a retracement back to that level of support, and then if you see a rejection, remember, you must see a rejection, then you can go short. Okay, so this is an example of an option. Let me show you for a downtrend in case the market is going down. Okay, so I've already marked this out. Remember the first rule, you have to see the market in a trend. Okay, in a trend, let's say uptrend or downtrend. In this case, we have downtrend. You have 1 2 3 4 5 move. Okay, after that we see a consolidation. Okay, we see one touch for support, one touch for resistance, second touch for resistance. Now resistance is valid for a breakout, second touch for support. Okay, after this, what do we want to see? A breakout to the upside or to the downside. Now in this case, we got a breakout to the downside, and after the breakout, what do we want to see again? We want to see the market, we want to see price go back to that level of support. Okay, so this is when price goes back to that level of support, and after that, what do we want to see? A rejection. Remember, I don't know the candlesticks you use, but I personally use the hammer candlestick or the engulfing bar. Okay, so I use this candlestick patterns, or there's also a candlestick pattern, like a candlestick pattern we call the close above or close below candlestick. Okay, so I'll show you in the rechart what that means. So when you get a hammer candlestick here, or a shooting star, in this case it should be a shooting star. When you get a shooting star or an engulfing bar, then you know that price is rejecting that zone, then you can go short. Okay, so this is how you trade this strategy. So I've just explained to you what to do. Now let's go to the rechart, okay, so that you can see a practical example of how this thing is playing out. Okay, so let's go to the rechart. I've marked them out already to save time, so that we won't waste much time here. Like I said, I don't want this video to be too long. So okay, so we have an example here. Remember, this strategy is not a holy grail. It does not win 100% of the time. Okay, you have to note that it wins at least 50 to 60% of the time. Okay, no strategy has a 100% winning rate, so you have to have that in your mind. Okay, I will also show you some losing trades with this strategy. Okay, so this is our first example here for a short trade. Okay, so what do we want to see now? As you can see, the market is definitely, from here the market is in an uptrend. Okay, we have low, high, higher low, higher high, higher low, another higher high. Then after that, we started seeing consolidation. Okay, this is the first touch of this this is the first touch of the support, first touch of resistance. Let me bring this down a bit. Okay, so we have this first touch of support, first touch of resistance, second touch of support. Now support is valid. Remember, we only need 2 touches to confirm that it is a consolidation. So you have first touch, second touch, first touch, second touch here. The both sides are valid, so we want to see a breakout to the upside or to the downside. Okay, so in this case, what do we see? We get a breakout to the downside. Okay, now see what happened. Remember, our first confluence is to see the market in a trend. Our second is to see the market ranging with at least 2 touch to the support and 2 touch to the resistance. Then we want to see a breakout. So after this breakout, what happened? Did we get any engulfing bar here? No. So this is what I mean by a close below or close above candlestick. Since we do not get an engulfing bar here, this is not an engulfing bar. It did not engulf this one, and it did not engulf, we didn't get a shooting star. It is not a shooting star. So what do we want? Then we want to place a horizontal line here, okay, to the wick of that candlestick. Now this is the wick of this candlestick here. You can see this is the wick. We place that horizontal line there, and we wait for a candlestick that will close below that candle, that candle. Okay, we wait for a candlestick that will close below this candle, below the wick of this candle, and we got it here. Okay, this is also a bearish strong candle. Remember, this strategy you can use any time frame. You can use 1 hour, 4 hour, daily chart, anyone, but for this example I'm using 4 hour. I will also show you with the 1 hour time frame. You can see this is 4 hour time frame. Okay, so after that, what happened? The price fell. Okay, the price continued going down, as you can see here. So let me quickly show you another example. I've marked them out to save time. I think it will not be difficult for us to find. Okay, I have another example here. Now, as you can see, price is an uptrend. Our first confluence from here. Now you can confirm with me that okay, price from here is going high. Okay, so after that, what do we get? We get our touch here, first touch of support. This is actually the first touch of resistance, first touch of support, second touch of resistance, second touch of support. Now the two zones are valid. Okay, so both support and resistance zones are valid. Now let's extend this, or you can use a horizontal line to mark out your support. Okay, in this case I can use a horizontal line to mark out the support. Now this is my support here, and after that, what happened? Price breakout and pull back to that zone. Okay, to that zone of support. Now, did we get any engulfing bar here? Did we get any engulfing bar here? No, we didn't get any engulfing bar here. But after that, we got a close below candlestick. Remember, this candlestick, these are the candlesticks in our zone, and we got a close below candlestick and also a momentum candlestick. This candlestick is showing a lot of pressure that the market wants to go down. Okay, so after that, if we place a trade here, we will probably get stopped out of this trade. As you can see, this strategy will lose most of the time, but it depends on how you place a stop loss. Okay, how you place a stop loss will depend if you get stopped out on this trade. I use HTR indicator to place my stop loss, and it gives me a wide stop loss that can help me prevent this stopper that will happen here. Now I have made a video on that HTR indicator, and it is here on my channel. I'll also put the link in the description, so you can check out for it and watch that video. Okay, so after that, what happened? Price went down a lot. Okay, so let's see another example. Now in this case, oh my god, I'll show you something very important. In this case, you can see what happened here. Let me zoom out a bit. Okay, in this case, we have price coming down, downtrend. Our first confluence, first touch point, second touch point, third touch, first touch here, second touch here. If I bring this down a bit, you see that this first touch here, second touch, third touch. The both zones are valid for a breakout. Now what happened? We got a breakout. Let me delete this horizontal line. So we got a breakout. Now we got a breakout of this zone. Okay, fine, we got a breakout and we are waiting for a pullback. Now did we get any sell reason, any sell entry here? No, we did not get any candlestick pattern. Okay, so we did not get any candlestick pattern to go short here. See, price continued going higher. Okay, so let me show you in another chart. So that is it for a 4 hour time frame. This is a 1 hour time frame. Now we are on a 1 hour time frame. Okay, so let's check out what we have here. Now we have price coming down. Okay, we have price coming down from this point, coming down, showing us a sign of downtrend, and we have our first touch point here. Let me bring this down a bit. Okay, first touch point, first touch for support, first touch for resistance, first touch for support, second touch for resistance. Now first and second touch, we have two touches for the both sides. Now we are looking for a breakout and a pullback. Okay, so very fine, we are looking for a breakout and a pullback. Let's mark out our zones in case we get a breakout to that zone, to that point. Okay, now this is our zone here, you can see. So we are looking for a pullback to that zone. Okay, so we have a pullback here to this zone. Right here we got a very good entry reason. Okay, after getting this entry reason, we went short. Let's say, for example, after getting this entry reason, you go short. if you go short here, you get stopped at. Okay, you lose this trade. This is why I am showing you this example, because you don't go out and start trading this strategy immediately. You backtest it, check if it is working on the pairs or assets you are trading. Okay, make sure it is working there before you start trading this. Okay, so we have a losing trade here, right? This is very good. Remember, this strategy will give you 1:2, this is the reward ratio, with a 50% win rate. Okay, so I think if you place 100 trade and lose 50 and win 50, you are still profitable, right? Okay, so now this is an example of a winning trade. This is an example of a winning trade. Okay, so we have price doing something like an uptrend. Okay, from here to here we have low, high, a higher low, a higher high here, but price failed to continue creating this higher high and higher low, so we started seeing a range. Okay, first touch point of that support, first touch point of resistance, second touch point of support, and second touch point of resistance. Remember, we must see these two touch points before we can validate the breakout. Okay, so we have another touch point, which is the third one for support, and we got a breakout. After the breakout, what happened? You see, as you can see, after the breakout, price put back to that breakout, to that zone, to that support zone, and we got a very good entry reason here. This is a kind of doji candlestick showing rejection from this zone, and another candlestick that engulfed the doji candlestick, which is an engulfing bar. So after that, we can go short. Okay, so this is it for this strategy, for this example. Let's quickly see another one. Remember our rules. We must see price making something like a trend. Okay, now we have an uptrend, kind of uptrend here, and what happened? We have a kind of uptrend here. We have first touch point of resistance and first touch point of support, first touch of resistance, second touch point of support, second touch point of resistance, and third touch point of resistance. Okay, we have 1, 2, 3 touch points of resistance. We are looking for a breakout now. We got a breakout here. We got a breakout, a retracement. Now we didn't get an engulfing bar. So what will happen? We bring out our horizontal line, put it at the wick of that candlestick, and we are looking for a candlestick that will close above it. This is a close above pattern. So we get a candlestick that closed above the candlestick, the previous green candle. And what happened? Price went high. Okay, price went up. So this strategy works very well. I've been using it. Now this is an example of a wide range. Okay, we have a very wide range here. I just marked out that point, but from here, if you agree with me, this range started from all the way from here. Okay, price was coming down, and we started seeing this range, this big range. Okay, so in the point of seeing this big range, what happened? No need to tell you, we have first touch point, second touch point, because you can see it already. We have touch points here, first, second, we have first, second here. So now what happened? Price broke out of that zone, of that range. This is the lowest point of this range. If you will agree with me, this is the lowest point of this range, right? That's the lowest point. After price broke out of that point, what happened? We got a pullback, and after this pullback, did we get an engulfing? This candle engulfed the previous one? No, it did not engulf the previous one. What do? We bring out our horizontal line. We mark out the wick of that candle. Now, did we get a close below candlestick immediately? No, we didn't get that. This candle went up, the second one went up, and the third one now engulfed this green candlestick, which shows us a signal to sell. Okay, it is important to know a strategy, but if you don't know when to enter the market, that strategy is as good as useless. Okay, so watch my video on how to trade with candlestick patterns, so that you will know how to enter with candlestick patterns. Okay, I will also put the link in the description below, so check it out also, and also check out the video on how to use ATR indicator. It will also help you so that you can know where to place a stop loss. As you can see, if you place a stop loss too tight or too close, you get stopped out. Okay, so this is the last example I will show you. So this is another wide range, kind of wide range. We have our price coming from here, giving us a sign of an uptrend, but the uptrend stopped and started ranging. First touch, second touch, first touch, second touch here. we have a valid zone. So price broke out of this zone, retraced and rejected. Okay, the first candlestick was a shooting star, kind of shooting star. The second candlestick also rejected the zone and also engulfed this previous green candle, showing us a sign of a fall. Okay, so after that, what happened? Price fell all the way to this point. So that is it for this strategy. Okay, I believe it will help you. Okay, so don't forget to like this video, subscribe to this channel. I'm begging you, so that we can grow this channel together, so that it will encourage me to create more videos and create better videos on how to trade with these pure price action simple strategies. So like, subscribe and share this video with your friends. It motivates me when I see likes on my videos. It motivates me to do more, so show your support by doing that for me. Okay, remember, this channel is still small now, but trust me, from now till 2 years this channel will be bigger than this. I believe that. So if you are still watching this video till now, help me, support me by liking this video, sharing it and subscribing to this channel, so that we can grow it together. Okay, thank you for watching, and I appreciate that. If you're still here on this video, thank you for watching. I will see you in the next video.